All right, good people. What's going on, man? Welcome, ladies and gentlemen, back to the Ty Trades Futures YouTube channel. Today is June the 9th, 2021. As a matter of fact, it's the only June 9th, 2021 that we'll ever get. The only one. So we got to make sure that this is the best one that we could ever have. And today, we want to do that by trading the Dow Jones Futures contracts, man. You know that's my favorite pair. It's been a while since we've been on the stream, so I'm happy to tap back in with you guys once again because we have a community here. And I love trading with you guys. I appreciate you for tuning in every time that you do. So let's go ahead and get to it without further ado. So, like I said earlier, we're trading the Dow Jones today. We really want to focus on taking high quality trades. Um, Over the past 2 days, since the week has started on Monday and Tuesday, we have had down days. Right on Monday, we had lower lows and lower highs throughout the entire session. We had the same thing on Tuesday. Only difference was in the afternoon, prices bounced back and really reclaimed all of the losses that they took a little bit earlier. So it'll be interesting to see what today's price action can bring. So before we even talk about today, we need to first look at the long-term picture, because when you analyze any type of chart, you want to do something that's called top-down analysis. That's where you start from the higher time frames, you figure out what the long-term picture is. Once you figure that out, then you start to break it down. So you go from the weekly to the daily chart to get a smaller picture, to the 4 hour, the 1 hour, and then you break it down into whatever smaller time frames you trade personally. Me, I do the 5 minute and the 1 minute. So I take my analysis from the weekly all the way down to the five. So that's what we'll do right here. So when you look at the weekly, you just want to determine what the direction of the trend is. And it doesn't take too much to be able to do that on a weekly chart. It's just a simple eye test. When we look at this chart, what do we see? We see prices going up. That's it. So we know that the overall trend is up. And that's all you use the higher time frames for. It's really easy. So then after that, we want to break it down to our daily chart, because up here on the daily chart, it gives us the same picture that the weekly did, but it gives us a little bit more detail, which can help us actually make some great entries on the chart. Now, what I've been talking about for a long time is this double bottom that we got off of the 50 period moving average. Once we had that form, look at what happened to price action. We ran up, we made a higher low, pushed up, we made a higher high, pulled back. Look at this, compare it to where we started from. This right here is a higher low in comparison to this one, in comparison to this one, and in comparison to this one. So we're going up the price ladder, and we continue to see the same things in the most recent daily candles that we're looking at. So we know that the buyers are still in the market. The buyers definitely have a strong hold. Now our question is, where can we get in to take advantage of this uptrend? You know that we always want to buy from prices that are lower in value, because you want to buy low and sell high to get the most value from every trade that you take and get what you truly deserve out of the market. So I don't know if you guys were able to catch last night's stream on Twitch TV. If you didn't and you weren't able to do it, the link is down below in the bio, so make sure you check that out over on Twitch. But last night, me and Darren were talking about this level right here at 570, 550-ish, looking for a pullback back down to these bodies, because we identified the fact that we had two double bottom wicks, two pairs of them as a matter of fact. We had one that formed not too long ago. We told you guys about this one last week. And then we had the same thing happen at the same exact level yesterday. So that's super significant. And then to see that happen, and then we come out and establish a higher low at the bodies for those same wicks that we saw yesterday. That's actually the perfect setup. That gives us all of the indications that the buyers are definitely supporting this market. Every time there's any type of selling pressure, the sellers are never able to close strongly. They just haven't been able to do it. So that tells us that the buyers still have a say so in this market. So for me, when I'm thinking about going long, I always want to think about where can I get in and where is the most recent levels of structure. So for me, I would definitely say that we have structure located at 34,600 as well as 34,580. But mind you guys, this is the US 30. The Dow Jones futures contracts, they trade the same way, right? Because I'm about to click over right now. Boom. Notice how it's the same chart, right? So the price action is the same. We just have different prices. So for the sake of today, since we're trading the direct Dow Jones and not the US 30, we want to make sure our prices are right. So we zoom into that same spot. That price is now 34,550. So those are the prices that I'm looking for on a Dow Jones futures contract. I feel like if it comes back down to this area, we should be able to find some good support. Not only on top, not only is that good structural support, but also that's a major whole number level. Excuse me, a major half number level. It's the halfway point between 600 and 500. So those numbers always matter. You have your halves, your quarters, and your wholes. So 625, 525, 550, 575, 600, all of those numbers are important. So when we look at the hourly chart, let's see what exactly do we get. Because I'm trying to make sure that I hop in at the right area. I don't see prices dipping back down below this wick right here. The low for this candle is 517. So we can round that up and call it 520. If prices get below 520, then it's something that's going on in the market, and we might have to consider even changing our bias and potentially hopping over to the short side. So that's on the table, but for right now, we're definitely looking more for those long trades for sure. So for me, my price is 550. I actually already have an order in on my platform already, hoping for that level to get hit, but if it doesn't get hit, we'll just be patient. I wouldn't really say that we can look for the uptrend until we start breaking above 620 and 640. I think these were the same levels I talked about yesterday. I think they might have been a little different in terms of price, but in terms of like actual location and on the chart, the same level. So that's my analysis going into this session. I'm really looking for the uptrend. I'm trying to figure out how that can happen. So let's go down to the 5-minute to see exactly where prices are. So looking on the 5, we're definitely coming up into a supply zone at 600. So we can go ahead and mark that off. That's super important because look at how many times this level has been respected. So that means that if this level is to ever be broken, something significant has just happened. And that could definitely be a potential move on the table for today. So let's keep that in mind too. And if we look at structure, notice how the same area that we were talking about at 550 kind of lines up with the bottom of structure right here. And that's the area that I'm trying to look at and get into to take my long trades. I feel like if I get in at this price, of course I would have my stop 20 points below right here at 530. I would probably look to catch 20 to 30 points from 550, so probably take it back up to 75, the quarter level, or 80. So I think that pretty much covers it. Let's look at the 1 minute to make sure that we didn't miss anything. Yeah, on the 1 minute, it looks like prices might be able to dip back down to structural support at 565. And I feel like if that happens, we're only 16 points away from hitting 550. 16 points on the Dow Jones is nothing. So we could definitely see that happen. But right now, when the open comes around in about a few seconds, we'll see how the market initially opens. And based on what we see from the initial open, we'll look to craft a plan for how we want to go forward throughout the rest of the trading session. So let me go ahead and hop over here in the chat. Make sure I talk to my traders. Let's have fun today, man. Let's get it. Let's get it. 929. So this is my live platform. This is my live account that I trade. I trade with TraderBait. Good commissions. They don't even pay me to sponsor them. So, you know, for me to say that, I really mean it. And let's make sure we have everything we need before the market opens. We have about 5 seconds. Let's go ahead and get into it, good people. Here we go. Make sure you guys follow me on Instagram too. I'm live. All right, so first reaction, first reaction from the open, we have prices moving higher a little bit. That's a good thing. I like what I see so far. Let's see if the Bulls have enough momentum to push past that 620 level. Remember, we talked about that. That's that major support. Excuse me, that's that major overhead resistance and supply. If we break through that, you guys already know. You already know. Now, here's the thing, when you see a breakout, you don't just want to trade it because it broke through that level. That's beginner basics. You don't want to make that mistake. You want to wait for confirmation after the level gets broken. So you either wait for some type of higher low to get established above those levels, or some type of bullish price action that you like to see as a trader personally. And once you see those things, that's when you hop into the trade. You never want to just take a trade because a level got hit. You always, that's just the first part of your overall analysis. So if you see a level get hit, you don't just trade it automatically. You look at it and you say, okay, that should let me know that I need to start considering uh, maybe a different way, a different method. Because if the prices are reversing off of that level, you won't know it until you see that confirmation. So when you see that, that's when you hop in. Initially, you just start looking like, okay, now that I've seen prices hit my number, I can start to look. Doesn't mean you hop in though. So let's look at what's going on right now. We had an initial up move, right, off of the open, but the buyers did not have enough momentum to sustain that motion. Sellers came right back in, created a bearish engulfing candle, and now are pushing prices back down. We should run into support, structural support down here at 565. So let's see if that can get hit. We're on the 5-minute chart right now. Let's actually move out to the 1 minute. Yeah, here we go. It's my bread and butter right here. It's nothing like a 1-minute chart. I love it. You get to see every single tick in the market. So we came back down to structural support at 65. So far, we're having a nice little bounce. If you had an order there, you could have caught a quick 10, 11 points if you're looking for that in the Dow Jones. All of my scalpers out there, that move right there was for you. Now, if we have enough momentum to continue moving past 65, we're definitely coming back to that 51. And that's what I'm looking for, man. Just got to be patient and wait for it. In the meantime, let's look at GU. GU is actually a very volatile currency pair. That's what I've been noticing lately, because on the intraday, you have opportunities almost every day to catch 20 to 30 if you know what you're doing and you know what you're looking for. So for all my GU traders, my pound traders, keep this pair in mind because it's definitely trending today. You had an opportunity to take it from 141.78 all the way down to 141.30. That's about 48 points, almost 50 pips. And then it went from 30 all the way back up to 60. Another 30 pip move within the span of less than an hour. So, yeah. GU is really nice if that's what you want to trade. Ooh, okay. So prices bounced off of structural support down here at 65. Popped all the way up to a high of about 590. So everybody that's still in that trade, if you still are, congrats to you. You definitely caught a good one. I was expecting a 50. I thought it was going to have a little bit more momentum to come back down. Maybe it still does. That's the question. But let's see. Let's look at the line chart. Because if prices turn around right here, that would definitely be a lower high. Whenever you see a lower high coming off of the open, that tells you that that could potentially lead to lower prices throughout the rest of the day or throughout the rest of the session. And we already know from Monday and Tuesday's price action that the market has been having a tendency to move down this year. I mean, not this year, but this week so far, these first 2 days. So if we see the same thing happening today, that should be no surprise. And you know, I find it very interesting because when we came here on Friday and we talked about the non-farm payrolls report, I remember telling you guys that sometimes in my trading experience, I've seen a lot of occasions where the non-farm payroll number would come out on Friday. You get an initial move that day, And on Friday, the initial move was up. Market was up all day long off of that news. But then you come into the market on Monday, Tuesday, the market just giving back all of the gains that it made those on that Friday for non-farm payrolls. So that's interesting because we might be seeing the start of a new pullback. I've seen that so many times where you get an initial reaction the first day, but then after 2 weeks, that initial move just gets completely wiped out. So that's something that we can definitely keep on the table. And if we see today turn into a down day, we could definitely expect that. And if you guys are paying attention, prices just came back down to structure once again at 65 and bounced all the way up to about 77. So you once again could have caught another good 10 points off of that move. So yep, we started off with downward momentum. We put in higher low. Once we put in a lower low, that gives us confirmation that the downtrend is on. And then once we see that, if we do see it, we'll have to think about whether or not we want to keep this order right here at 551. Because you don't want to catch a falling knife. Remember how I told you guys a few minutes ago, you don't just want to put your order there because that's the price. You want to see the confirmation. So we don't like how prices come into our level. We can close that order or cancel that order before it actually gets filled. Save ourselves the trouble. So let's get back to the 5-minute. Okay, you guys see this long tail candle wick right here? That's a very bullish signal, especially when you get two of them, two twins right next to each other. That right there is called a tweezer bottom. That's one of the very famous candlestick patterns that leads to higher prices more likely than not, especially when it comes from supply level areas, demand level areas, demand zones, where you know there will be a lot of buyers and a lot of potential action at that level. So let's move up to the 15. This is what I call bottom up analysis. Remember how we started off? We did top down. Well, now we're doing bottom up, where you might trade off of a 1-minute chart, but you want to make sure you keep flashing to the 5-minute, to the 15, and maybe even to the hourly chart, here and there occasionally, to make sure that you keep the bigger picture in your head, because that 1 minute, it moves all day long and you can get caught up in it and almost forget what the bigger picture is, especially when the retracements and the pullback comes. Because on the Dow Jones, when it's really trending, you might get a retracement or a pullback that's 100 something points. If you didn't know any better, you would think that the trend was flipping and turning around. But you got to be cautious about that. Gotta be. We're coming back into structure once again. I would bet that we're probably gonna end up breaking that level to the downside. I say that mostly because we started off to the upside, we came all the way down. Now once you see a big down move like this, that right there is a bear flag. Then you see a consolidation zone following that bear flag. You want to look to short at the top of the consolidation, so either at 590-ish, and then take it back down to the bottom, 560, which we just saw happen. So we're breaking through that level. We're moving down. Coming into that 34,550 level. Our order should get hit. I like the way that it's moving into the level. I don't think it's too much to panic about right now. And if we take a loss on this one, so be it. But I like the potential reversal we could get from down here. It looks like we might have already had it because prices came down to a low of 52. We saw that they're at 62 right now. So that was the 10 right there. I was looking for more so 15 on this one. So if it gets to 66, we can go ahead and cancel our order. Actually, we'll go ahead and cancel that now. And the reason I did that is because my trade happened. I had my order at 51. It came down to 52 and gave me the move that I was looking for. I've learned in situations like that, it's better to just get rid of your order instead of keeping it there and hoping for the second chance. Because sometimes that second chance is not as lucrative as the first, and you'll take a loss and say, man, I knew I shouldn't have did that. So we'll see what happens. But just based on market structure, we need to put our I feel like we need to shift our market analysis. We were looking for the long trade, but now that we've broken past minor structural support at 565, we could potentially see that move back down to 520 that we were talking about earlier. Because we have, like, let's go to the line chart. Let's check it out. We have, boom, lower high coming off of the open, consolidation zone. We have a break out of that consolidation zone, continuing back to the downside. So it will only make sense that we look for our last low. Our last low is located at 565, what used to be previous structure support. Now it becomes resistance once prices break past it. So all you do is wait for prices to come back up to that level. You put your orders there, and then you take prices down to a new low. So let's go ahead and put our order right here at 66. 566. Let me get it right for you guys, for everybody that's listening just on audio. But actually, yeah, I actually don't want to keep that order, mainly because I've never liked to take short trades coming off of a pullback or retracement that starts with a wick like this, especially not on higher volume. Higher volume usually means that everybody who wants to act and sell in that moment already has, which means that the pullback could be imminent, and you don't really want to hop in front of that until all of that shakes itself out. Then once the market starts to roll back over, that's when I want to hop back in. So we're at that 550 level right now. We're getting that bounce. Getting that bounce. But you know what? I do like this level, because this candle before kind of confirmed that it is okay to trade from this level. Because see, if we just had this long tail candle wick and then we had a green candle following it, that's not something you want to necessarily look for. But I like our order right here at 65. It's at our last low. Used to be previous structural support. So yeah, I like that order. Let's see if we can get it hit. Almost 2 points away. Let's see if we can get it. And we have it. So we're in at 34,565. We have our stop 21 points above at 586. And we're looking to take it back down to 525. That's the level that we were looking at in our pre-market analysis. So that'll serve as our target for right now. But we also want to consider potentially getting out at the bottom of structure down here at 546, because you always respect structure. Structure should always be your first profit target, and then everything else is secondary after that. So let's see if this trade plays out. According to price action, we should see a new low very soon. But if not, we have our stop in place to protect us. Our stop is towards the top of our consolidation zone that we initially established up here towards the 90s. So let's see how this plays out. Oh yeah, let's talk about our risk parameters for today, June the 9th. Today, I don't want to lose more than $30. You know, I like to take $10 at max on every loss. So that'll give me about 3 trades to work out with in the market. If I take 3 losses, I'm pretty much out of here. Today, I'm actually going to cut it a little bit short. If I take 2 losses, I'm out, because I don't want to even get to 3. If I'm at 2, more than likely I'll probably hit 3. I already know myself. So that's my risk parameters for today. And in terms of gains, I'm looking to get anywhere from 20 to 40 points net total for today's action. So that's my goal for the day, 20 to 40 on the positive side, or a $30 loss on the the losing side. Now, what I don't like is the fact that we're making higher lows, right? You see how we made this initial low down here at 542? You follow it up, we have a higher low right here. I don't like to see that. Not at all. Not what you want to see. So let's see if the Bulls can continue the momentum that they have right now, or if they're going to find a little bit of resistance at these last lows. That should hold up. We just follow price action principles. That's it. We identify what's going on the chart. Once we see it, we trade accordingly. So you know what I'm thinking? I'm thinking about getting out of structure. So I'm going to go ahead and move my order right here to 540. Right here towards the bottom of this wick, because I don't want to test the market and try and get too much. I just want to get what it offers me. If it offers me 20, I take 20, not 40. Let's move our stop back up to where it was. Because a lot of times you'll see the market move in your favor, your break-even stops get triggered, but sometimes it'll come back, retest your entry before it decides to go down. So if we take a loss, we take a loss, but I usually don't move my break-even stop, but in this situation, because I like the trade, I want to give it room to run. I'm willing to accept the risk that comes with that. I hope I don't pay for it. It looks like I might. Yeah, I'm definitely gonna pay for that. But oh well, that's how the cookie crumbles sometimes. You got to be able to accept the risk that comes with the actions that you take. Sometimes you take a risk and it works out. Sometimes it doesn't. But you got to take your losses and eat them when they come. So if we get stopped out right here, that's just what it is, man. That's a part of the game. We'll look for the next opportunity. But let's see if the sellers come through one last time. But I highly doubt it, man. Once you see a candle like this, back to the upside, that usually is what the Bulls need to hop back into this market. Let's check the 5-minute and see what that looks like. Yeah. Oh. Whoa, something just happened. Something just happened. It flashed down really quick. Oh, yeah. Oh, yeah. That's what we like. Now we can move our stop back to break even. Because if our initial order gets hit again, we don't want to be in there, man. Let's give it a little bit of time. Nah, man, I don't want that. Okay, so we took a $4.72 loss on that. So if we want to figure out how many points we lost, we just multiply that by 2, or we can pull up our orders. So we hopped in at 65, we got out at 72 for a loss of, that's what, 7 points plus commissions. So well, we paid 122 for commissions, so that means it was what, 61 cents per side. So I never like losses, but if I take small losses, that's acceptable in my opinion. So we're still kind of hovering above that last low. We never really closed above it. We had one close, but that was quickly rejected. So I do think that the short trend could continue. I'm not the biggest fan of hopping in though. It's kind of choppy in my opinion right now. I more so like to get into the market when it's trending. If it's not, then I'll just wait, probably leave it alone. What's GU doing? Slight double top. Moving back down. But honestly, that last low is still holding up. You know what? I'm gonna just go. I usually don't like to use lines on my chart because I try and keep it clean. But just as a reference point, I want to put this line right here where this last low is located. And let's change the color. Let's make it a little bit brighter for you guys. Let's do fuchsia. That's what it's called, right? Alright, so this is the last low. As long as we stay below here, bro, we're good. It's a little choppy, but as long as that holds up, we're straight. So we should see prices moving down to that next low. But if not, potentially maybe we get a push up back up to this last low. So as a matter of fact, let's put our order right. I was gonna say put an order there until I saw this long tail candle wick. Now it's giving me a little bit of hesitation. But you know what? I like the trend. I'll put my order there. If I get it, I'll take it. The way prices are moving, it looks like it's about to get ready to break. So hopefully we can get lucky and have prices retrace back up to this 560 level at the last low. But if not, then we know that more than likely we'll make a new low. And then once that happens, we'll just repeat the same process that we did before. So if this is the low right now, this is what we're gonna look to get in if prices ever break this level at 540. So remember how we talked about 520 being the ultimate target. So prices should be able to break 540, come down to 520, which is not too far away from the daily lows at 518. And then once we get the retest at 540, then we short and take it back down to 520 or 500. Same scenario as to what we were trying to do right here. So let's see if we can get that 66 to get hit. We're at 61 right now, so we're pretty close. Let's see if we can do it. Oh yeah, look at the 5 minute. We gotta be short on this one. It had its chance to bounce back to the upside when it made all of these wicks. I feel like this candle right here was the last chance. Once buyers failed to make it happen right here, it pretty much sealed their fate, at least for the next 20 to 30 minutes, in my opinion. Still have our order up here at the last low. Let's see if we can get hit. I think we will. I think we will. We're getting close. We're only 10 points away. On the Dow Jones, that's nothing. That can happen in a snap of a second. Like we saw earlier when prices all of a sudden flashed all the way down and flashed all the way back up. And there we go right there. Our order just got filled. We are in short one contract at 34,566. We have our stop back up at 87 just like we did before, or 1 point higher this time. Looking to take it back down to our ultimate target of 520. Why did we get in this position? Because we saw that we were making lower lows and lower highs coming off of the open. So we saw that, we identified that we were in a slight downtrend for the moment, which means we need to look to enter at areas that are previous supply zones. So we look to the left, we find our last low that got located at 565. Now we've been seeing since the morning time, we have been trending around that area. We tried to break above it once, we're unable to do so. Move back down, back below the level. We came back, and on this retest, which I believe is a retest, I hopped in for my order. And I like this trade, I really do. I think the downtrend has a chance to continue. So let's see what we get right here. And honestly, if I take the loss right here, that'll be my second loss. Like I said earlier, I'm playing it really tight today. I'm not trying to take too much in terms of losses. I'm more of a momentum trader. If I start taking 2-3 losses, it throws off my mental psyche. I have to be in a good space emotionally and mentally to trade well. taking losses over and over does not put me in that zone. So I want to cap that as much as I can and get rid of it. So let's see how this plays out. Let's check the 5 minute. Five. On the 5, I don't know about this long tail candle wick right here. That's pretty strong. And then we see all of these wicks down here. That's forming a demand zone down there. Man, I think I might have hopped in at the wrong time based on the 5 minute. See, that's why I always say you got to do bottom up, because the 1 minute chart looks good, but on the 5 we can see that we're definitely in a little bit of a shaky situation. We got a tweezer bottom right here. Woo, that's not nice. This candle hasn't closed yet. It has 5 minutes until that happens. But yeah, the higher time frames are not supporting my uptrend trade. Since I'm already in it, I'm the type that just sticks with it. So I'll let it ride, but if we take that loss, then we understand why. We learned our lesson for the day. But let's hope that we get the sellers to come in and just help us out, save us this one time. But whenever you're in the market and you start talking about hope, man, you better go ahead and chalk that up as a loss. In my head, I've already accepted the loss, so I'm cool. I think that's how I kind of accept my losses, because before I take any trade, I already accept the possibility of loss. Because I think about it. If my stop is 21 points away, before you take the trade, you got to think about what it's going to feel like if your stop gets hit. If you can't deal with that, then don't take the trade. And most of the time, in the situations where you can't deal with it, it's because your brain is subconsciously telling you that you're taking a bad trade. You got to listen to that part too. Your intuition talks to you as you get to understand these charts more and more and really understand and know what you're looking at. Because your emotions can take over sometimes, but your subconscious is always going to come in and check you and tell you the right thing to do. It's up to you whether or not you listen and decide to go with that intuition. And I think this is something that me and Darren talked about on our show last night. And not only that, but we talk about it all the time, is that if you want to get good, you got to practice, man. That intuition only comes from studying the markets and having a good idea about how things move, how things have a tendency to move, and what historical data has provided for you. So that way you can kind of get a good story of what you're seeing in the moment, in the present. So in order to get that intuition, you got to study these charts in and out. You got to know these candles. You got to know these charts, man. You really have to understand it in whatever way you like to understand charts in. And just continue to study, build up that database, build up your base of information. So that way when you get into the market, you can understand more things because you've seen more scenarios. You like, okay, I've seen this type of price action in practice before. So now I might not necessarily know what's coming, but I have a good idea of what to expect. And based on those expectations, if they're strong enough, I might be able to take that trade that I'm looking for. So that's what backtesting does for you and studying does for you. And that's how it builds that intuition. So make sure you always follow and listen to your intuition when you get the chance to. Nobody's perfect and we can't do it all the time, but we strive to do it more times than not. So let's see. So far, it looks like the trade is going against us, and we can kind of see why. We made a consolidation zone down here. We could call this a double bottom. From that point forward, we moved higher back up to the top of the range, came back down, made a higher low. So yeah, I would say if we were to put odds on this trade finishing in profit, I would say maybe 15%. Finishing for a loss, probably 85%. But that's okay. We already accepted that. So now we need to potentially think about what's next. Like what do we want to do going forward? We see what's going on so far. We're breaking past major structure support. So once we break past this, more than likely prices will come back up, retest 95, and then we'll see what happens coming from there. I thought the last low would hold up today, but I guess not. I think that was loss number two. Yeah. Before I go, I always want to document all of my trades, screenshot them, put them in my records folder, and then from that point forward, I go back, I study what I did that day, I figure out what went right, what went wrong, and based on that information, I go into my back testing session to try and improve and work on what I need to. So that's today's chart. One thing I've been kind of figuring out about the Dow Jones lately is that because the longer term uptrend is so strong, it just hasn't really made sense to take these short trades sometimes. It's more so like it's really just small little retracements setting up for higher prices. So I want to keep that in mind going forward because I feel like I've been pushing the Dow Jones on the sell side lately. I need to stick towards the long side. Like I always say on my long term analysis when I do it on the stream on Tuesdays and Thursdays, is that the overall chart for the Dow Jones is up. You look at this thing since it came out in the 1800s, it's been going up ever since. There has never been a drop or a crash in the market that hasn't been recovered from. This thing does nothing but go up over time. So on an intraday basis, you always got to remember that the bias, no matter what the chart says, is always up. So take every down movement with a grain of salt. And that's what I learned today trading the Dow Jones. I hope you guys learned something too, man. I appreciate you guys for tuning in. It's been a good one so far. I'll see you guys tomorrow night, 9:35 p.m. Eastern Standard Time. The link is down below in the bio, twitch.com. Make sure you check us out. But until then, trade well, take it easy, and have fun.